I think the hope that the Fed and everyone else has is hopefully this inflation problem will get better with time. And if that happens, then there's no need for the Fed to get super aggressive with interest rates right now, because the reality is if the Fed got super aggressive with interest rates right now and they started jacking up interest rates even more aggressively than they're doing now, that would cause a crash in the stock market. It would also cause a crash in the housing market, and that would for sure cause an economic recession. And the Fed doesn't want to cause a recession, especially if it's unnecessary. So what the Fed is saying is, let's hope that the supply chain issues get better, and let's hope that the inflation issues get better as well. And if that happens, then we can just gradually keep raising inflation. Now, of course, this comes with a risk as well, because if the Fed is wrong and inflation doesn't get better with supply chain issues and the value of the dollar continues to go down, then the Fed would have to get even more aggressive to now fight inflation. And if they're not willing to get more aggressive, or if they do get more aggressive, you're going to have an issue either way, because if they're not willing to get more aggressive, then you could risk something happening to our currency, our dollars. And if they do get more aggressive, then that means the Fed will have to jack up interest rates even more, meaning that recession then would be even worse, because now you have to jack up interest rates even more aggressively to fight even more inflation, because the more severe inflation is, the more aggressively that you're going to have to fight it. And the more aggressively you fight inflation, the harder the economy is going to be hurt. Now, here's the thing. Well, the Fed is made up of some very well-educated economists. What you want to do is make sure you take care of yourself and don't just blindly listen to somebody else, because, well, the Fed has been wrong in the past. I mean, they were wrong about inflation. They said it was transitory. Even in this most recent meeting, they talked about how they were wrong about calling inflation transitory, and now they're having to do more to fight inflation because they didn't start fighting it then. But they've also been wrong in the past. I mean, they said that when the 2008 crash happened, that there was no risk of a real estate crash. And then when the real estate market started to go down, they said that there's no risk of this real estate market entering any other part of the economy. It's contained to the housing market. And then when it started hitting the whole economy, they said there's no risk of a financial market crash. And then we saw almost the entire financial sector collapse. So take everything that the Fed says with a grain of salt, and hopefully they're right. Hopefully inflation gets better. Hopefully the economy just continues to grow and there's nothing to worry about. But just in case that they're not 100% right, you should take care of yourself and your money by being financially educated and understanding the different things that you can do, which brings me to, let's talk about the things that you can do right now. Different assets do well in different times. Some assets do well when you have high inflation. Some assets do well when you have low inflation. So the thing that I want to talk about today is a few of the major investment opportunities. You have stocks, you have real estate, you have stocks, then you have crypto and gold. I'm going to talk about this. I'll go in this order. That way we can talk about different ways to save money, how to fight inflation, and how you can benefit from the different things that could potentially happen. I'll talk about the different scenarios if we go into recession, if we don't go into recession, if inflation is a big deal. I'll talk about the different scenarios of the different things that you can do with your money. So let's start by talking here and then move this way. Gold is your traditional inflation hedge. Cryptocurrency was supposed to be an inflation hedge. That's what everybody said before the pandemic, that your Bitcoin is your new digital gold. But then what we saw happen was that cryptocurrency and gold moved in completely opposite directions. When we were worried about inflation, gold would go up in price while cryptocurrency many times went down in price. So what we saw was that Bitcoin and most cryptocurrencies weren't the best inflation hedges through now, essentially between 2020 and now. Cryptocurrency was not the best inflation hedge. However, cryptocurrency can still be an investment in the technology in cryptocurrency, in the blockchain of cryptocurrency. So I am an investor in cryptocurrency. Now, my job here is not to tell you to invest in crypto or not to invest in crypto. It's more of just to be aware of the opportunities and how to capitalize on them if you believe in it. I believe in crypto. I understand that there's a lot of risk and speculation in crypto. It's a very small piece of my portfolio, the speculative side of my portfolio. And I also understand that within the crypto space, there's a lot of crap coins, there's a lot of scam coins. So when I invest my money in crypto, I'm only investing in a couple things. I'm investing in Bitcoin, Ethereum, and a couple other ones, but that's it. I'm investing in the major things that I understand, and I believe in the blockchain and the technology. Now, the way that I invest in crypto is I invest every single day. I have a dollar cost average system set up where every day I'm buying a little bit of Bitcoin, a little bit of Ethereum, and a couple of smaller coins, and that's it. If you do decide to invest your money in cryptocurrency, one little disclaimer that I have for you is make sure you keep your cryptocurrency in a wallet, ideally a cold wallet, which is a USB, something that's out of the cloud. That way you don't risk your cryptocurrency being lost if your brokerage goes under or something happens in the cryptocurrency world. So you can take your cryptocurrency out of the world, out of the internet world, and have it in a USB, or at the very least have a hot wallet, which is a wallet online, to provide some extra protection protection for your crypto. Gold, on the other hand, is more of a traditional inflationary hedge because when people are worried about inflation, what that means is people are worried about the value of their currency because inflation, what it means is not just the price of things going up, it's the value of your dollars going down. When the value of your dollar goes down, that in turn causes the price of things to go up. So that's when people turn to metals and commodities like physical gold because you have a limited supply of gold. And so it acts as a better store of value. Our dollars that we go out and buy things with, these are a currency. It's a means of exchange. In fact, it's a fiat currency, meaning that the government says that our dollars have value, but at the end of the day, our paper dollars are just pieces of paper. Whereas something like gold takes time, effort, and labor to mine. So it takes the effort and it's a store of value because of the effort that it takes to produce the gold versus it costs something like 12 cents to produce a $100 bill. Now, while gold can be an inflationary hedge, another thing that I want to remind you is that gold is more like an insurance position. I own physical gold, but it's a small piece in my portfolio because gold doesn't produce more value. It just sits there and stares back at you. So for me, I own some physical gold, but it's an inflationary hedge. It's one of those things where if everything goes wrong, you see that doomsday scenario, that's when your gold can have some value because then you can sell that gold and use it to buy something else because gold has been money for centuries, since the beginning of time essentially, or at least modern civilization. Gold has been used as some sort of money. So that's the value that gold has. Cryptocurrency, now you're investing in something more speculative. And this is a long-term investment where if you believe in the value of the blockchain, you believe in the value of this new technology, the new internet, then this can give you the opportunity to get a piece of that. But you have to be willing to weather the risk and you have to be willing to weather the volatility. If you are worried about inflation, or rather if you have high inflation, this is good for the stock market. But if you're worried or have a recession in general, this is bad for the stock market. So what does that mean? Well, when you have inflation happening, when you have a lot of inflation, you have a lot of dollars floating around out there. And when you have this type of high inflation, more dollars will end up in the stock market because some people are not going to want to hold cash in their bank account. So they're going to want to convert this cash into something else. Some people will buy gold, some people might buy crypto, but people will also want to buy stocks because stocks are companies. So you can own a piece of the company and you can own a piece of the producer instead of just having your value of your cash go down. So when you are worried about inflation or when you have a lot of inflation, more cash flows into the stock market. Plus, the corporations now will be able to charge higher prices, or they have to charge higher prices. And so when you own a piece of the company, the value of the stock generally goes up. So if you have high inflation, stock prices tend to go up. When you have a recession, you see the opposite happen because now money is being pulled out of the economy is slowing down, people are spending less money, there's less dollars out there, so corporations, businesses make less money, which pushes stock prices down. Now, typically what has happened is when you see these types of recessions, you can look at 2020, look at 2008, look at 2001. When we saw these types of recessions, the economy slows down, the Fed would then come out and create some sort of stimulus. So the Fed would create inflation. They might do quantitative easing, they might send us stimulus checks, they might cut interest rates. All these things print more money to create more inflation, to fight the recession, and then what happens? The stock market starts to go up because now more money gets created, it enters the economic system, and that causes a rally. We saw this happen in like textbook form in 2020 when we saw the market collapsing, then the Fed opened up the money printer and we saw the fastest stock market rally ever because the Fed started doing unlimited quantitative easing. They printed an unlimited amount of money to bail out the stock market. And so we saw this recession, which hurt the stock market, then the inflation benefited the stock market. So this is where you want to pay attention to what's going on in the economy and what the Fed is doing, because if the Fed continues to just fight inflation and they say, hey, if we go into a recession, well, it doesn't matter. We're going to keep fighting inflation. If the Fed does that, well, that would help strengthen the value of the dollar, but it would hurt the stock market in the short term. Now, this can create opportunities for you to come in and buy these distressed assets at a great price. It's like Black Friday for investors. Now you can come in and buy some good assets on sale. You just don't want to buy a company into bankruptcy, so you want to make sure you do your research, but it can create a buying opportunity for you there. If, on the other hand, we start going into an economic slowdown, and then the Fed says, okay, we can't keep fighting inflation because we're worried about a recession, then they reverse course and they start cutting interest rates even though we have high inflation. Now you can see the stock price rally again because now there's more dollars being entered into our economic system, more money is flowing into the markets, more free dollars, cheap dollars are entering corporations. That could push stock prices higher, although it would make a bubble bigger, but that's exactly what happens. And third, we have the real estate market because there are a lot of worries out there about, is this going to be a repeat of 2008? Are we going to see the housing market crash like we saw happen then? Now, let me just start with this. The factors and concerns that we have today are nothing like 2008. Before 2008, you had things like the ninja loans and subprime mortgages. So you had a lot of issues that we're not seeing today. Now, the issues today, although we have some in the housing market, we're seeing the adjustable rate mortgages making a big comeback. The issues today are outside of the housing market. The issues today are more of an economic issue. The inflation issue, the issues in the economy, those are the bigger issues that could trickle down into the real estate market. Now, the same analysis applies here as we did in the stock market. Inflation and a recession. If the Fed is cutting interest rates, causing more inflation because they say, all right, we have a recession problem, we have an economic problem, so we're going to focus on the economy and forget about inflation, well, that will cause real estate prices to go up. So inflation benefits real estate prices because more dollars flow into assets. Inflation makes asset prices go up, and recessions make asset prices go down. However, the thing, again, you want to pay attention to is what the Fed does, because if the Fed says we're going into a recession and we're going to keep fighting inflation, meaning the economy is slowing down, people are buying less homes, people have less money, and they continue to make borrowing money more expensive, they keep jacking up interest rates, they keep pulling dollars out of the economy, that would put housing prices even lower. If you enjoyed this shorter clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to invest your money in real estate, our team put together an amazing guide on real estate investing. This guide goes over what real estate investing is, how to start using real estate to generate cash flow, and how to build wealth with real estate. This guide is completely free when you sign up for our daily newsletter. So if you want to read our guide on how to start investing your money in real estate, you can download that guide just by clicking that button right over there. Thank you for watching, and as always, keep hustling.